Okay, welcome back, everybody. Today we're going to be starting Chapter 2, which is an overview of financial reporting for state and local governments. We finished Chapter 1 up last Friday. Obviously, we're out on Monday for Martin Luther King Day, so didn't have anything for Monday. Please, everyone, if you're not already, get into Connect, start those assignments, and get your book. If you have any issues, please let me know. As I said last week, it was brought to my attention that the PowerPoints were actually locked when you tried to click on the links. So now I've got new links up, so please everyone try and let me know if there's an issue. Still, it should be just fine to where you can get in. So the lecture links should be working, and the PowerPoint links. And so just so everyone knows, the Chapter 1 Connect assignments are going to be due this weekend. So just pay attention to that, and be getting started on Chapter 2 as well. So like I said, today we're going to be starting the Chapter 2. So let's go ahead and get into that. Okay, some of our learning objectives for this chapter is going to just get an overview of the contents of a governmental financial report. We talked a little bit about that during Chapter 1 on Wednesday and Friday of last week. We wanted to find the governmental reporting entity, find out exactly what constitutes a governmental reporting entity, and illustrate the basic financial statements for a state or local government. So those are going to be what our overall objectives are for this chapter. Does anyone have any questions before we get started? Chapter 1 was all right. Everyone is understanding Chapter 1 and decent. Okay, so a little overview of Chapter 2. It's going to provide illustrations of state and local government financial reports introduced in Chapter 1. So we're going to be taking a look at some of these, of what they actually look like and how they're made up, and just some of the key things we need to know for moving forward in this class. The slides that follow are going to emphasize points you should notice on the various statements. Like I said, we're going to be pointing out the key points on the statements that we need to know. And each student should obtain a full set of financial statements to review. I'll probably print some out and bring some in, but there are some examples, and I'll probably post them on the Moodle as well. They're also located in Chapter 2. There is a lot of content in this chapter because we're pretty much doing an overview of all the statements and the whole comprehensive annual financial report. But Chapter 2 is a great chapter. Like I said, Chapters 1 and 2 is really your foundation for the course moving forward. Life will be much easier if you're really strong in Chapters 1 and 2. So a lot of information here, but a lot of good examples in the book as far as really just looking at what the statements are and how the layout of them are. So the CAFRE, which is once again the Comprehensive Annual Financial Report. So we're going to look at that versus the minimum reporting requirements of state and local governments. So obviously the complete comprehensive annual financial report is overall recommended for all state and local governments. Some smaller governments can report less information, but it's important to know that the less information is really just going to be the differences of less statistical information, and also combining statements could also be omitted. So that's going to be the main differences. The actual body of the CAFRE is going to be the same as it would before. So the MD&A, the Management Discussion Analysis, is still going to be required. You're still going to have your basic financial statements. That's for both the government-wide and the fund basis, along with the footnotes. We also need the RSI other than MD&A, which is the required supplementary information. So that's the main difference between the full-blown CAFRE and the minimum reporting. So overall, it's going to be pretty much the same, just going to be much smaller. Like I said, the main difference is going to lie with the statistical information and the combining statements. So the CAFRE, moving forward from this point forward, we'll just mention it as the CAFRE, the CAFR. We all know that's the Comprehensive Annual Financial Report. It's going to have three main sections to the CAFRE. You're going to have an introductory section, a financial section, and a statistical section. So three main parts to the CAFRE. So we'll start with the introductory section. Now, it's important to note that the introductory section is not going to be audited, so it's unaudited. It's going to include a table of contents, a letter of transmittal, and miscellaneous items such as organizational charts or names of chief government officers. So that's some items we can expect to see within the introductory section. Let's see here. Just give me just a second here. What happened? I had some pages up here. Let's see. Okay, yeah, so this right here is a look at the introductory section, what one would expect to find. So right here, once again, we have the letter of transmittal from the finance director, the list of government officers. So we can see here we have the mayor. It'll give where their office is located, and then the city manager and the city commissioners are listed there. We also have the organizational chart could show up there. Obviously, everyone knows what an organizational chart is. It just shows the different people that are involved in the organization and the levels of authority that they adhere to. The GFOA certificate, that's going to be awarded if you get a unmodified audit opinion. So if you get a clean audit opinion, then you get that certificate there. So these are all just some items that we would expect to see in the introductory section. So just pretty basic stuff here, just kind of giving you an introduction to who's involved with the government and the structure of the government. So that's the introductory section there, a good example on that one. On the financial section, we'll have the MD&A, which is also known as the Management Discussion and Analysis. This is going to be a paragraph format summary of most important issues during the year. This is going to be reviewed by the auditor, but not audited. The main reason he reviews the MD&A is just to make sure that it correlates with the financials that are available. So just to make sure that nothing sticks out to the auditor, he wants to make sure that whatever's being discussed in that management discussion and analysis does relate to the financial statements that were audited by the auditor. So that's why that MD&A is going to be reviewed by the auditor. So let's take a look at the MD&A. So some of the stuff we can expect to see in that here. This is also all these pictures here that I have up here. These are actually the ones that are in the book in chapter 2. If they look familiar, I don't know if anyone's actually read chapter 2 or not yet, but these are actually the actual illustrations or the snapshots from chapter 2. But this is some of the stuff from the MD&A we can see that they could talk on. They're going to have some financial highlights. We won't get into a lot of it here, but it says here, I'll just read the top bulletin. The city's total net position of governmental activities was $38.4 million as of December 31st, 2020. Net position for the business type activities is $47.9. So pretty much just giving us some financial highlights. They're going to talk on the overview of the financial statements, and then also on the government-wide financial statements. Obviously, this is not an exhaustive list of what would be expected in MD&A. I believe your average MD&A is usually around 8 to 10 pages long, so obviously we're missing some pretty significant stuff here, but this is just to give you an idea of what some of the content or material that would be expected to be seen within the MD&A. So obviously the MD&A is the start of the financial section. The auditor's report, when it is audited, will be included. So that's important to know. When the auditor's report is audited, it will also be in there. And the independent auditor's report, once again, this is just a clip from chapter 2, and it's just showing what the actual report would be. Has anyone in this class had auditing yet? No one's had auditing, so this is pretty new to you. So pretty much the report is just pretty much the first paragraph is going to be we have audited the statements, pretty much all the different types of statements they have, business type, governmental types, and fiduciaries and all that. Then it tells management's responsibility for the financial statements. So it's just saying management is overall responsible for what is presented in the statements. Then it tells the auditor's responsibility. It tells the framework in which they used in the process of auditing. So it tells that. Obviously, additional paragraphs are omitted to describe the nature of the audit procedures and whether the audit believes they provide adequate basis. And then obviously the opinions. So that's pretty much in the signature, the address, and the date. So it's pretty much just the auditor's opinion. And like I said, this will be included when it's audited. Financial statements and notes, we'll get into those. Obviously, we're going to be covering a decent amount of financial statements because this chapter covers both the government-wide statements and the fund basis statements. So we'll get into some examples of those. It's important to note that those are always going to be audited. The financial statements and notes are always going to be audited. The required supplementary information, which is RSI, is going to also be reviewed by the auditor. So just to be important thing to point out, remember the MD&A and the RSI is reviewed. MD&A being the management discussion and analysis, and the RSI being the required supplementary information. Combining statements, more details about main statements if needed. So if there's something that's unclear in the main financial statements, then we can have a combining statement showing more detail of whatever the original statement was. So the last section, the statistical section, this section is not going to be audited. Information is often non-financial in nature, and it's usually going to present 10 years worth of information. So the last statistical section is just going to be pretty much, it's not audited. It's just going to be them just throwing out some non-financial information, and it's usually just more qualitative by nature. Obviously, if it's not going to be financial, it'll be a lot of qualitative stuff, and there'll be quantitative stuff in there as well. But we'll get into that later in the semester to see some more stuff that's actually in the statistical section. A little more on the statistical section. GASB statement number 44 indicates 5 categories of information that can be found within the statistical section. These categories consist of financial trends, revenue capacity, the debt capacity, demographic and economic events, and operating. So those are the main categories of information that one can expect to find within this statistical section of the CAFRE. All right, so three main sections to the CAFRE. What are they? Introductory,
financial,
right,
and the
statistical. Right, so 3 parts to the CAFRE. All right, governmental reporting entity. All right, so what do we mean by the actual governmental reporting entity? So let's take a minute here and think of like for-profit sector, right? So we have these reporting entities, right? And a lot of times companies could have subsidiaries, right? And could be majority owned, so the company has to actually report that. Even though they're independent companies, they have their own financial set of documents, and they have their own sets of financial statements. But at the end of the year, FASB says that they have to be consolidated, so the consolidated financial statements. And the reason being is because FASB says if another entity has control over a subsidiary, then overall that is really just one economic entity because they have control over that entity. So therefore, FASB says we need to go ahead and combine those statements, meaning consolidate them. So intercompany transactions and all that stuff is going to be eliminated within the process. Intercompany sales, intercompany profits, intercompany inventory, all that stuff all has to be eliminated because we're trying to see where that company as an economic entity stands as a whole. So that's what the governmental reporting entity is going to get at as well. So think of that for business consolidations process at the end when consolidating financial statements from the parent and the subsidiary. Well, just like in business, governmental reporting entities are out there as well. So you could have a main governmental body, like let's say the government of the state of West Virginia, right? Well, within that government, there could be some reporting entities that fall under their umbrella, same as like a subsidiary. So there could be subsidiaries of that government, is the best way to think of it. So the GASB, just as the FASB says that it needs to be consolidated, those discrete or those component units, which is what it's going to be conferred to here, subsidiaries in the business realm, they're going to be component units for the government. So it's pretty much the same thing. Think of them the same way. What GASB says is those need to be combined within the government's reporting units because it falls under the umbrella of the government because they want that economic entity of the government. Does that make sense? So they need to combine that stuff. So if a primary government is financially accountable for another entity, the component unit must be included as part of the primary government's reports. So once again, because it is part of that government, so we need to report it as part of that government. And that's if the government is financially accountable. Okay. This requirement prevents governments from creating separate units that hide part of the government's debt or resources. So as we know, so pretty much it keeps them from creating shell companies. As we know, that was the fall of Enron. Because Enron, if we remember, was creating these shells to hide their liabilities and their debt, to inflate their assets and make their working capital and the strength of their company much better than what it really was to entice investors. So pretty much, this is just another way of keeping that government truly accountable and to see the situation or the position as an economic entity. Makes sense? So a component unit is going to be included in the financial report of a primary government if, so first, the relationship with the related entity must have one of the following characteristics. The primary government controls a voting majority of the other organization's governing board or may impose its will on the organization. So the first thing is voting majority or it can impose its will. The second thing, the other organization is fiscally dependent, meaning financially dependent upon the primary government. And the thing that constitutes the organization being fiscally dependent on the primary government is if the government approves or modifies its budget, and we know that's done annually, so if they approve or modify the budget, if they set charges for its services, or if they have to be approved through the primary government to take on debt or to issue debt. So those are the main things there. Second, the related organization must represent a financial benefit or burden to the primary government. So it could be a financial burden if the primary government is responsible for that other component unit's liabilities. So if they can't cover what their expenses are, their liabilities, then the primary government has to step in and take care of it. So that would be an example of it being a financial burden. A financial benefit would be if the government's entitled to some of its resources, or if they can redirect those resources, or tap into them or access it. So it has to be a financial burden or the financial benefit, and whether they can push control over or have the voting majority, or if they help set the budget, set the prices for what they sell, or can redirect funds or have to have their authority for issuing debt. So pretty much makes sense. So pretty much they're in the driver's seat here, right? They can't take on debt without their permission. They can't set what they sell their prices for without our permission. We want to make sure it covers what we need on the cost end. Obviously, if we can impose our will on you, or if we set the voting majority, then that's how we know that it needs to be a component unit with underneath that government. Pretty much same as in your business for-profit sector. If they have control over it, meaning they have the control over the voting stock or the common stock of the company, or whatever, however the control is deemed important for however a person takes control. So pretty much this is the outlay of the rules we need to follow if it's going to fall under that government. Does that make sense? Next, we just have two little examples. First is with Charlottesville, Virginia. This is an example of a financial burden or benefit. Here it says the school board within Charlottesville is going to operate the public education system in the city for grades kindergarten through 12th grade. The city is going to appoint the majority of the board members and approves the budgetary request of the school board. and it also provides a significant amount of funding. So obviously it's going to be a financial burden. So obviously we know the school board is going to be a component unit of the city or the government of the municipality of Charlottesville, Virginia. Does that make sense? Get a good example there. The next is an example of fiscal dependence, and it's out of Baton Rouge, Louisiana. So the parish fire district, the council appoints a majority of the board members of each fire protection district. The council has the right to approve the fire protection district's tax rates and charges, and each district is legally responsible for the debt it incurs. So there's just an example of how the fire district there is going to be fiscally dependent upon the government of Baton Rouge, Louisiana. Makes sense there? So there's an example of either the financial burden or benefit, or whether it's going to be fiscally dependent. So we're good on that, on what constitutes whether it's going to be a component unit that falls outside or under the umbrella of the government, right? And we know why we have to include those component units, because we're looking at the economic entity as a whole. So that's the main points there. So aggregation issues and reports. So now this is dealing with these component units, how they're going to be presented within the actual financial report of that primary government. So aggregation issues in the report: assume the city library authority meets the requirements for inclusion as a component unit. So how should the library information be shown in the overall CAFRE? In most cases, it will appear as a separate column. So if it's going to appear as a separate column, which we'll see the component units here shortly once we get into one of these statements, if it has its own separate column, then it's going to be a discrete presentation. So that'll be presented discretely. In other cases, the information will be blended. If the information is going to be blended within the funds, this means that it's going to be intermingled with the regular governmental fund columns. And this approach is used if the library has very strict oversight from the city with no genuine separate financial existence. So pretty much, if they're so intertwined that you just can't tell the difference between the two, then you're just going to blend it right within the other governmental funds, because technically it's just part of the governmental funds, whatever fund it would belong in, whether it be special revenue, capital projects, debt service, whatever it might be. So that's going to be blended. But when it's discretely presented, that's when you can actually differ between the two. So we're good there on how to actually include those component units. We know when a component unit would be included, and we know how to include them based upon the level of involvement. Right? We're good? Okay, this is a review from Chapter 1 here. It's just the required content of state and local government financial reports. 3 sections here. First section, obviously, is the management discussion and analysis. We got that. We know what that is. The second part is going to be the basic financial statements. The first part is going to be the government-wide financial statements, the government-wide statement of net position, and the government-wide statement of activities. Next, we move on to the fund basis financial statements. For the governmental type funds, we have a balance sheet. Then we have the statement of revenues, expenditures, remember not expenses, but expenditures, and changes in fund balances. And then we'll have the reconciliation of governmental statements to government-wide statements, because remember, governmental type funds operate or record transactions based on the modified accrual, which is the current financial resource measurement focus, as opposed to the accrual basis, which is the economic resource measurement focus. So that's why that third part, the reconciliation of government statements to government-wide, is included there, because we have to switch the accruals, modified accrual to accrual. Next, the proprietary funds has the statement of net position and the statement of revenues, expenses, and changes in fund net position, and then the statement of cash flows. Your fiduciary funds have the statement of fiduciary net position and statement of changes in fiduciary net position. And the last part of the basic financial statements is going to be the notes to the financial statements. And that's really important. If the notes have to be included, because if there's no notes, then it's not GAAP. And required supplementary information, the RSI, other than MD&A, is your third part that's going to be included within the content of state and local government financial reports. So like I said, once again, that's pretty much just a review from what we had last chapter. So the process of the financial reporting is pretty straightforward, really. So we can see here we start out with we have our ledgers at the bottom. Obviously, we know when we record transactions that we record them into the GL. So if we can see on the bottom left-hand side of this financial reporting process chart, we have the GL for the governmental activities. Obviously, if you follow the arrow up, that's going to produce the fund basis financial statements for the governmental activities. We know that's going to be on the modified accrual basis. So from there, if you follow the arrow on up, we need to just change to the accrual basis from the modified accrual. That's going to be accomplished on the worksheet entries, which is the combining worksheet, and then that'll eventually lead us to the government-wide financial statements that will produce through that step. Next, we have the records of the general fixed assets and long-term debt. So that's going to also go through the process of changing to the accrual from the modified accrual, and that'll also enter through the worksheet entries and end us with the government-wide financial statements. Next, same thing, we have the GLs for the business-like activities, which is the fund basis financial statements for business-like activities, the proprietary funds. You can see we do not use the change from accrual basis to modified accrual. It just goes straight to the worksheet. Why is that?
Because it's business-like activities.
Right, because it operates on the accrual basis, right? So there's no need to change it from the modified accrual to the accrual, because remember, government-wide statements are reported using the accrual basis. Your fiduciary funds and your proprietary funds are reported using the accrual, so there's no need to change it. Only governmental, remember, only governmental, and your fixed assets is going to go through the process from accrual basis from the modified accrual. So obviously that gets us there. Fiduciary funds, there's a difference here. Fiduciary funds, with the GL ledgers or the general ledgers for fiduciary activities, obviously that's going to build our fund basis financial statements for fiduciary activities, right? But we stop there. Fiduciary funds are not included in the government-wide financial statements. Why do we think that's so? Why would we not include fiduciary fund statements within the government-wide statements? Think about just the word fiduciary. What does fiduciary mean? It says a trustee. What's a trustee?
They just have like control.
Right, they're controlling an asset, whether investments or money for a third party, right? Because they're just holding, they're sponsoring it. They're a trust. So fiduciary is just a trust. Another word for a trust, like a trustee. So it's not our money. It's not the government's assets, right? So that's why it's not included. So it's really important to know that fiduciary statements stop at the fund level. We're not gonna move them to the government-wide statements because it's other people's money. We're just merely acting in a fiduciary capacity as a trustee for their investments or their funds, whatever it might be. So that makes sense why it's not included, right? Because it's outside of the government. Oops. Okay. So government-wide statements, once again, we know they're the statement of net position and the statement of activities. We know the statement of net position measures assets and liabilities using the economic resource measurement focus, similar to business balance sheets. So same thing we're used to seeing on government-wide. It's the same thing you've learned in your intermediate or your principles. It's all full-blown accrual. So statement of net position is your balance sheet, right? Statement of activities measures revenues and expenses using the accrual basis, similar to business income statement. So just like income statement. Now they do look different. They do look very different, but it's using the same basis of accounting to report on the statement. So statement of net position is similar to what?
It's like the balance sheet.
Right, because it's the net position, assets, liabilities will give us, the difference between the two is net position or equity, whatever it is, net assets, however you want to, it's all the same. So statement of net position, balance sheet. Statement of activities are usually what's used to produce income of the companies, the activities. So statement of activities is like the income statement. So just trying to help you think of ways to remember it. So real important to remember those. So government-wide statements continued. It may show prior year data in comparison to current years. As we know, for audits of business-like business-like companies, for-profits, we have to have prior year data in comparison. I think 2 or 3 years worth of balance sheet, 2 years income statement, something like that. 3 years income statement, 2 balance sheet. I forget, something like that. But in this case, may show prior year data. Unlike commercial reports, there is no statement of cash flows required. So it's only the 2 statements. You have the statement of net position and statement of activity, so no statement of cash flows, which is nice. Government-wide statements do not include fiduciary fund resources or activities, as these resources belong to others. So as we talked before when we were looking at that flow chart, fiduciary funds are not reported in government-wide statements because obviously they're not our assets, so it doesn't belong in there because it would be misleading to the readers. So we'll start with the government-wide statement of net position. Assets are going to be listed in order of liquidity. Classifying assets and liabilities into current and non-current categories is optional. So a classified approach is not absolutely imperative. It's not required. So assets and liabilities do not have to be listed as current or non-current. I personally think it's better if they are. I know CD like that. I like to know what's current, what's not. But it's just nice to know that's not required here. So net position, remember, is the difference between assets and liabilities, because that's the only thing that's really going to be reported on this statement of net position is assets, liabilities, and net position. The important thing here is the difference. I know we talked a little bit about it because this is the net position is your equity section of a balance sheet and your for-profit, right? And we know the equity section on the for-profit has your common stock, your preferred stock, your additional paid in capital, retained earnings, all AOCI, stuff of that sort, right? Retained earnings. So the main difference here, the equity accounts are different. Just remember here, equity for government is going to be known as net position, and it's going to be broken into 3 categories. The 3 categories is going to be net investment in capital assets. The second is going to be restricted, and the third is unrestricted. Okay, so it's important to know that the net investment in capital assets, if you notice it says net investment, just not investment in capital assets, that net is very important there. So what we're talking about, the capital assets, the net investment in capital assets is going to be less accumulated depreciation, right? Because usually fixed assets or capital assets have a contra account of accumulated depreciation, right? So we know it's going to be less accumulated depreciation. And here's where it's different than your business type. It's also going to be less the current outstanding debt. Not current, it's long-term and current. It's just less the overall outstanding debt to buy those assets that relate to those assets. So the net investment in capital assets, the formula is going to be your capital assets, less accumulated depreciation, less outstanding debt required to obtain those assets. Okay, so that's what's net there. Restricted is going to be given. The restricted assets will be given within the statement. We'll see that. We're going to take a look at one here in a second and go over all this so you can actually get a visual of it. And so we'll have the first amount given, the investments, your capital assets, less accumulated depreciation, less outstanding debt that was required or used to obtain those assets. The restricted will be given, we'll have that amount. And the unrestricted is going to be a plug. So it's just going to be whatever the residual is. We'll know what the net position is, but the difference between net position and the 2 other categories, it's a plug. That's going to give us what the unrestricted is. So that's how we find that number. It's a plug number. So everyone good on the 3 categories here on or the outlay or the layout of the statement of net position for the government-wide. So a little more on the government-wide statement of net position. The primary government results must show separate columns for governmental activities and for business activities. Now, the numbers in these columns are derived from the totals in the individual governmental and business type fund statements. So we're going to get those numbers just like we see on that flow chart. We build the fund statements first, and then the government-wide is something we're going to do at the end of the year. It's important to note we can build them as we go or at the end of the year. Most governments just operate and then build them at the end of the year. So it's just good to know we build the funds first, and at the end we change it to government-wide for the readers. to have something that they can read. The governmental activities must first be adjusted to the accrual basis. Obviously, we know that because they're reported using the modified accrual approach. And then component units will have one or more additional columns or be shown in the notes. Because remember, we want to make sure that those component units are included, but we also want to make sure it's distinctive between knowing that it's a component unit as opposed to as a part of the primary government. Okay, let's see here. All right, and here. So we're talking about the statement of net position, right? Looks a little bit different than a balance sheet, right? With what we're used to seeing. So remember, it says it does not have to be listed in a classified format, right? Meaning current, non-current, right? So you can see here, it's really, even though they're listed, they've got it listed in order of liquidity, which they said assets that are listed in order of liquidity, and they still do have, the liabilities listed in order of when they're due. So, but it doesn't have to be. But the assets are listed in order of liquidity. Remember, there has to be a governmental type activities column and a business type activities column. We can see that up there at the top. So we'll have the governmental activities, business type activities, and then the primary government, right? Obviously, if you can see here, if we add these together, going across is how we get this list here for the primary government. And then we have here our component units, right? So that component unit would be what? Like what we talked about earlier, if it falls under, if we have the authority to direct and all that. So that's what the component unit. So that's where it's going to fall in line here. Remember, it could have one column or two. Obviously, in this case, it's one. What else do we see here that jumps out to us? So remember, it's assets, liabilities, and net position are going to be your main points of it. So we have assets listed in order of liquidity. We have the liabilities listed, and then net position. Remember, we have three categories of net position, right? We have net investment in capital assets, restricted, unrestricted, and then total net position, right? Okay, so let's hone in on this net position for a second. So, what's the formula for net investment in capital assets again? Do you recall? I'll help you with it. Just off the top of your head. Let's start with capital assets. So if it's net investment, capital assets, less what? Think of business type.
Right. Less accumulated depreciation.
Right. Less what?
Related debt.
Right. That's outstanding. Less related debt outstanding related to those. So let's just look here. Capital assets, net of accumulated depreciation. Okay. So that's already net of accumulated depreciation, right? So that's already, accumulation's already been accounted for, right? It's already been taken out. So that's capital assets net of accumulated depreciation. Now, so net investment in capital assets, we can see it's $23,699,070. We see the capital assets up here under assets, net of accumulated depreciation is just over $65 million, right? The outstanding debt in this case related to the capital assets are the two bonds. So if we take away the bonds payable due within 1 year of $2,164,521, and the bonds payable due in more than 1 year of the $39,834,882, it'll leave us with $23,699,070. So that's where this number's coming from. The next category of net position is restricted. If you look up here, restricted assets under assets. What amount do we see there? $3,933,126. What amount do we see at the bottom? $3 million. It's verbatim, right? Same thing. So usually your restricted is going to be given to you. We'll have to calculate this one. The main thing here, usually the assets listed for the net investment in capital assets, usually by nature the capital assets is going to be listed net of depreciation. If it's not listed net of depreciation, then usually you might see the contra account right below it, and you have to do the math yourself, but just pay attention to that. And then obviously the next step is take out the related debt. That'll give you your first category of net position. The restricted is given. And unrestricted, once again, is a plug, right? Meaning we have 23 in this. We know total net position. We can get that because total assets less total liabilities gives us total net position, right? So we can get total net position. We can get net investment in capital assets because it's what? Capital assets less accumulated depreciation, less outstanding debt related to buying those capital assets. That gives us net investment in capital assets. Restricted is usually given within restricted assets. So obviously unrestricted is going to be a plug. The difference between these two and the total net position is going to be our plug of unrestricted. Makes sense? We can see here, same thing I want to point out. Same thing here, 48, the capital assets accumulated, net of accumulated depreciation. If you take away these two, it'll give us that. The restricted, the 2.295. We can get the total net position by taking the difference between the total assets and total liabilities, and then that's the plug. Same thing for primary government. We've just moved from left to right, gives us the primary government. Same formula moving down. Makes sense? Component units, same thing. It's just a component unit. So obviously, statement of net position, we're going to be starting with assets, list in order of liquidity, liabilities, and then net position. The primary government has to be broken into different types of activities, governmental activities, business type activities. Those added together from left to right is going to be the primary government. We know the component units will have its own or numerous columns. And then total net position. All right. And we're going to come back to this after we look at the statement of activities for just a second, because the numbers have to match on the statements, and we'll get to that. Okay, so next for the statement of activities, our component units, we'll start with that. If the government has multiple component units, can have two or more columns to show their component information separate from the primary government. We've seen that there was one column, the far right one, within the statement of net position. May need to prepare a combining statement to consolidate the multiple component units before putting only one column in the main statements, and may show condensed financial statements of the component units in the notes. So that's just pretty much how to deal with those component units. So next, the government-wide statement of activities. This statement shows the net cost of activities after deducting the revenues that can be directly attributed to each function. General revenues, such as property taxes, are then added to the bottom to get the change in net position. And by adding the change in net position to the beginning balance of net position, this reconciles the statement of activity back to the statement of net position. So I know that was a lot, but let's just look at that, what this slide's saying here. So first it says this statement shows the net cost of activities after deducting the revenues that can be directly attributed to each function, right? I know it's a little blurry here, but we'll try to see here. So remember, it starts off, so statement of activities, right? I know it's a little blurry. And once again, this is in your book in chapter 2 as well. Everything I'm showing you is in chapter 2. So we see, remember it says it starts by the function or the program with the cost. So if we can see here at the far left, it says functions, programs. We'll see governmental activities, business type activities. So it needs to be broken down the same way. So we have all the different governmental activities, all the different business type activities. And you can see there's the sub-columns. Total governmental activities, that's the indented down right here, will give us the number here. Business type activities, we have the subtotal here. Probably be easier if I can point it to this way. Yeah, that works. So total government here, and then component units. We got the component units line down here. So here's our expenses. So remember, we start with the expenses. So that's the general government, judiciary administration, public safety. So that's how much we spend on all these different activities, okay? Remember, the big governmental activities is going to be your 5 governmental funds plus your internal service fund. Business type activities is your enterprise fund. So that's where these activities are coming from. Next, remember it says then you add back the program revenues. So these are the charges for services of each of these relative services. So these are the expenses. Here's charges for services, because these are all the revenues. Operational grants and contributions to each relative one. Capital grants and contributions. The next, for governmental activities, you see that here it says net expense, revenues, and changes in that position. So for governmental activities here, obviously, we can see all this. This amount here is the expense, adding back the revenues, and that's the difference. So obviously we see we lost money on every single one of these governmental activities. That's why we only put the activities with the expense, and we add back the actual program revenues that can be related to each activity, so we can see how the activities perform, bless you, on their own. So here's the difference. So if you would add these two amounts to this, we would still have lost this much money, okay? So you notice nothing's listed here because these are not governmental activities, these are business type activities, okay? Business type activities, you notice there's nothing listed here, right? Because these are all governmental activities if you look to the far left. If you come down here, now we can see there is business type activities because this is what we're doing. So it's the same thing we did here. This column is your expense column plus the revenues related directly to the activity will give us this, okay? The total is just going to shift this column over, shift this column over, okay? Makes sense? Component units, same song and dance. Expenses, relative revenues are tied to the program. Blank because it's not the primary government, not government activities, not this, not total. Bam. So all this is just the total, same way we did it. So you're getting the flow of it. Okay, remember how it says next that, so we just went through the statement shows net cost of activities after deducting the revenues directly attributed to each function. So we've seen that, right? Dang it, I'll just leave it there. And I know we're running short on time. I'm almost done though. I just want to wrap this up right here. It's a good stopping point. Okay, so we've seen that. Matching activities, right? Governmental, business, that we get the flow of it, how it works, right? Next, general revenues. Remember it said general revenues are then added at the bottom right-hand column. So now here's our general revenues of what the property taxes and sales or stuff of that stuff goes. So miscellaneous, whatever it might be. So the general revenues, and you can see it'll line up with the governmental activities column, right? So between just the activities, the government lost, the government activities, business type activities. So just for governmental, we lost over $27 million, right? Well, for general revenues, if you look down, we made over 31 million in general revenues. So if we take the difference between what we made in general revenues and what we lost in activities, then the change in that position is $3,257,95. Does that make sense? The difference between what we lost in activities and what we made in general revenues. So the net position at the beginning of the period was $35,159,973, right? So now the net position at the end of the year is the $38,410,768, right? So that's how we can reconcile it, okay? So so pretty much we have the activities. We start with the expense. Match back the revenues. That way we can see how the activities performed on their own. So then we can see. Then we add back general revenues to see where we are in the overall position of the government. So that's why the change in that position was that, because that's through the activities of the year, that's how much it changed. That's how much it was at the beginning of the period, that position at the end. So remember this 38,410,000 right here? This is the statement of activities, right? Let's go back to our statement of net position now. Total net position for governmental activities, $38,410,768. Business type activities. Notice how we have to break them up. 47,874. Let's go back here. And this will be the last thing I'll show us. Same thing. 47,874. If we do the actual component units, we'll have it total 86. So all these have to relate back. They have to match. They have to correspond with what on the statements. Does that make sense?
Yes.
makes sense how the outlay of it is and how the other one works. Okay, well, so now today we went over the introductory section and we've touched the first part of the financial section and the second part of it. So now we went through the government-wide statements. Next, on Friday, we're going to start getting into the governmental fund statements. So we'll start with the governmental fund activities, proprietary, and most likely we're going to need 2 more classes on this chapter because I really want us to get in and see. We might get through it on Friday, but I doubt it. I just want to take my time really going over these statements to make sure it stands out to you. Does it make sense? Did I explain it clearly for you? Any questions on anything?
No, I think I have.
You think you're understanding it pretty well? Just try to review it while it's fresh in your brain. I know a lot of times it helps. Remember, all these are in chapter 2, so if you can look at it, gives some good, good reading that goes like one page. It's not a bad chapter. It's got 1 page of a description, then it shows the outlay. But we'll get into more of the governmental stuff, the governmental funds. So there's the government wide, and we'll get into the governmental level funds next. So that's all I have for us today. Like I said, just continue working and connect. The first assignments are due this weekend. And as always, if you have any questions or if anything, shoot me an email, bring them to class, come to my office hours, whatever you want to do. And we'll start back on Friday.